Start off with why the decision was made to curb the activity in trading of those specific stocks, as well as in some of those options positions.
So simply put, we are worried about the integrity of the marketplace and the clearing systems. It is important that your audience understand that in the options market, there is a buyer for every seller, and on every contract outstanding, the one loses and the other one gains. So as this stock has gone from $17 to today as high as $500, and it goes up and down $100 or $200 at a clip, the options that are outstanding, which there are 3 million option contracts outstanding.
Yeah.
The average price now of those option contracts must be around $10,000. So that's about $30 billion. Okay. That means that there are roughly $15 billion of winners and $15 billion of losers.
But was there any risk there, Thomas? Was there any risk there that somehow that there wouldn't be settlement, that people wouldn't be made whole on whichever side of the trade they took?
Well, of course, because if the sellers cannot pay, if the losers cannot pay the winners, then the brokers have to pay the winners, right? Now, there are a bunch of smaller brokers in this game who do not have enough equity to do that. So if they blow up, then the clearinghouse doesn't get paid. The clearinghouse has to take over the positions and has to liquidate them. That pushes the market further, and then larger and larger brokers can fail because all the brokers, the remaining brokers, have to make good on the clearinghouse's losses.
Can you tell us who on the other side of that trade was at risk of not paying?
Again, please?
Who on the other side of that trade was at risk of not paying, not making you whole?
So as I said, for every option contract, there is a buyer and a seller. Now, depending upon whether this option contract is at a profit or a loss, on each option contract, there is one side at a profit and one side at a loss. So on every option contract, there is a loser and there is a winner. There are 3 million option contracts, $10,000 loser per contract, $10,000 winner per contract. So that's about $15 billion of losses, some of which will be uncollectible. So
has anyone, Thomas, has anyone tapped you on the shoulder and asked you to do this? The fact that you've done it, the fact that Robinhood has done it, the fact that E-Trade has done it, are you speaking to any other authority who's asked you to put in place these stops?
No, but as we have said in our press release, unless the regulators require that trading be moved to liquidation only, this thing could go on for a long, long time and generate more and more losses.
Thomas, why not go after the specific traders, the specific accounts there that showed the risk, that showed whatever potential collateral risk or counterparty risk, rather than making a blanket ban on trading at all of any of the shares?
Yeah, so let me explain to you. We have 27,000 accounts who have some sort of a position in GME. And we are only about 5% of this game. So we're really talking about 500,000 accounts. It's very hard to figure out who is where and what do they do.
Have you heard from regulators?
Sorry?
Have you heard from regulators?
Yes, we have heard from FINRA. They asked us how we were doing. Luckily enough, we have an automated liquidation system. So our risk management is all automated, so we do not have a problem. But I believe that there must be other brokers who do. And unless we restrict trading, this problem is just going to snowball. And even those of us who do not have a problem may eventually have problems if there are too many bankruptcies.
Is this something that you think regulation can and will fix? What is the answer to this conundrum that has forced you to not allow you to serve your customers?
So the immediate answer for the regulators is to put these stocks and options into liquidation only. And the long-term answer is to regulate the margin requirements better.
At any point, Thomas, over the last 48 hours, the last few days, was there any significant counterparty risk that Interactive Brokers was facing?
Of course we were, of course, but we were able to so whenever a customer becomes under margin, our system automatically liquidates it. So of course we have liquidated thousands of accounts.
And so the issue that existed, that's been resolved. You have it under control.
From our point of view, it has, but
Yes.
there must be lots of other brokers out there who haven't been able to do that.
Robinhood has already been sued by a customer for this. Are you preparing for lawsuits?
No, I'm not. So a broker has the right to set margin requirements and to choose the products it offers or doesn't offer.
Thomas, are you worried, though, about a backlash from your consumer base, about a backlash that brokerages with very low fees was meant to democratize investing, and instead many feel that they're unable to exert what is their authority?
So I'm very much in favor of democratization, but I am not in favor of short squeezes. So why would a person buy this stock for right now it's $228? Why would a person buy this stock for $228 when its regular value is about $7? The only reason to do that is to join the short squeeze. If the short squeeze happens, the stock could go to infinity practically, because of course the shorts have to borrow the stock, and once there is no more stock to borrow, they cannot deliver, right? So but they have to. So the broker has to buy in the shorts at any price. So there is no solution to this unless shorts are liquidated.
Okay, well, that's one perspective. I am curious, Thomas, then when you talk longer term here, is there going to be more of a permanent restriction, not only on the specific companies that we're talking about, but companies that get to a level of short interest that is just so out of whack with reality, like we saw with GameStop? Should investors expect that going forward if they're using your platform?
Yeah, I would think whenever the short interest approaches 80, 90, 100%, investors can think that they cannot on the long run, most investors will not be able to make money on joining short squeezes.
Do you see the problem?
It's basically illegal.
Yeah. Do you see the problem, though, where this has become an issue given the short squeeze, but some of the people being punished weren't responsible for starting the shorts to begin with?
Could you say it again? I'm sorry.
Yeah, some of the frustration comes around the short squeeze has started this, but the people hurting right now who aren't being allowed to trade on the platform weren't those shorting the stock to begin with.
Well, no. The people are unable to open new positions. So people who have had their position for some time, they are happy. They can do whatever they want. They can sit with it or they can liquidate it.
Thomas, I'm interested that you said that you think this is illegal behavior in some way. What grounds do you think that it's basically illegal, is what you said?
So why would you buy a $300 stock that's worth practically nothing?
But why is that illegal?
Well, market manipulation is illegal, and the reason why you buy that is that you're counting on a short squeeze, in which there are more stocks outstanding that have to be delivered than there are stocks available in the world. Like GameStop has 100 million shares outstanding, and there are roughly 200 million longs. 140 million longs, right? So if they all stand for delivery, it cannot happen. So the longs can force the broker to deliver to them, and the broker has to buy in the shorts. The short does not have money anymore, so the broker has to have take his own money and buy in the shorts at any price.